Hi, and welcome to what you need to know out of Section 2 of the Builder's Guide to Accounting to pass the Florida Business and Finance exam. Today we cover 11 chapters, and I'll be pointing out all the test questions as we go. If you're serious about passing the Business Finance exam, my videos are a must-watch. I have made a 97.5. I have a finance degree. I've spent 6 years in roofing, and I'm going to cover exactly what you guys need to know here. I've taken over 40 quizzes, exams, and simulators, so my comprehension of the topics here and the questions that are asked is very solid. This is not a full highlighting guide, but if you'd like to ace the exam, this is what you need. I've posted Section 1 with math. There's a ton of very important math in Section 2, so we must do a separate video on that. We have depreciation straight line and the makers, declining balance depreciation. We have vehicle trade-in and book value, calculating current and acid test ratios, break-even analysis, labor performance standards, and then at the end, not so much math, but balancing the bank and checkbook. So we will do another math video next, and then on to Section 3 and whatever math comes along with that. If you like the FCM and AIA, let me know. Please support by clicking like and subscribing. Costs you nothing to do so and really helps me out. So these are all the topics you need to ace your exam. If you'd like a full highlighting guide that I use, I'm going to link that in the description. The one that I used, was very valuable for me. We also have a very valuable WhatsApp group chat linked in the description. I would encourage you guys to join that as well, guys and gals. As far as highlighters, use gel or AKA Bible highlighter so it doesn't bleed through to the next page. A lot of these pages are very thin. I would suggest maybe doing a full highlighting guide in yellow. What I have to tell you that's very important and you need to know in orange. And you can't write in the book, but you can underline as much as you'd like. The only color you can't use is red. All right, if you need to connect with me, do so through Instagram or TikTok or in the comments below. I'll do my best to get back to everybody. Let's get on with Section 2. We start off on page, 97. We go to a page about 230. We'll move fairly quickly through this material. Chapter 9, check writing and recording. Question. What is a source document? A source document are the invoices or receipts that caused the check to be written in the first place. Adjustments to make when you balance your account, your bank account. Whenever you have, again, a lot of bulleted things like this, it's very easy to do an A, B, C, D question. What's included, what's not included? What adjustments do you have to make? What adjustment do you not make? So highlight this page. It also continues on page 2. The check register. The check register shows at a glance what expense categories you have and where your money goes. This document is the basis for the largest monthly entry in the general ledger. It lists in one place the accounting for all checks written, showing who received payments and in what amounts. A couple questions are in there. Don't go longer than 30 days without preparing your check register. Anything you do in this book monthly, I point that out as we go. What is a major function of the check register? It's that it identifies math errors. Not really a question, but just avoid writing checks to cash because it's hard to prove who the payee is. Remember, under the cash method accounting, you don't record accounts receivable or accounts payable. You only record when cash changes hands. So you're not going to have any ARAP. Here's another test question. All I highlight is the test questions. What is the most efficient way to keep track of your accounts payable on a monthly basis? And that is to maintain 2 check registers. One for your current month billings and another for your previous month billings. Again, everything I highlight is all of the test questions and questions that I've had in one way or another. Chapter 10, accounting for materials. What is the largest direct cost for a builder? Well, that's going to be obviously your subs, labor, and materials. Those are direct costs, and those are going to be the largest sum. Another test question is, it's estimated that about blank to blank percent of labor cost on a residential construction are spent on just materials and handling. It's 8 to 10%. You could have 12 to 20%, 10 to 15%, 4 to 5%. It's 8 to 10% of your labor costs are just spent on moving materials. And what percentage of your direct costs will be for just materials? About half of your direct costs will be for materials. Question, definitely 2 questions here. And then you have a 3-bullet list. There's one on the next page. Highlight these, read these. Those are also test questions. What can early deliveries mean? What can overstocking increase? What can late arriving materials cause? Those are easy A, B, C, D questions. Another test question. What is not included on a purchase order? You'll come to these 2 pages. This is a copy of a purchase order. This is what's included, this bulleted list. And it might ask you what is or is not included, and you'll have to select from the answers. It could say, your authorized signature, your sales tax and shipping instructions, and something else. And you need to know that all of those things are actually on your PO, and come here just to double check. Even if you think you know the answer, this is what I've learned. Always come back to the material just to double check, especially if it's just an easy, quick flip to a page and you know where it's at. Anything materials is accounting for materials. That should be pretty easy. Moving on, purchase journal. What's the purchase journal for? Well, this is what it looks like, and that's to analyze your company material purchases at a glance over a given period. Pretty basic. Stock requisition. I've had questions pop up on this quite frequently. What is the stock requisition form and what is it used for? You can use the requisition form to generate a purchase order to replenish issued items. So whenever you have a warehouse full of inventory and you have one of your employees taking inventory out or returning inventory from a job site, they have to fill out this form. What did they take and how much did they take? And they'll check the box whether they issued that to a site or returned it to a site. You can use these to generate purchase orders. Very important. Again, I only highlight what's our test questions. Okay, valuing inventories. This is where you really need to always, as I advise you, read the question and read the answers. In the BGA, you have specific cost, first in, first out, called FIFO, and last in, first out, LIFO. So, in the BGA, the question could read, what is the easiest way to maintain a perpetual inventory? Okay, well, it says according to the BGA, so you come to this book and inventory. What is the easiest way? It's last in, first out. That means the most recent materials you got in are the first ones out. If it says, according to the Florida Contractors Manual, they have a 4th option in there that is simple. So when you accounting control of inventory, you have the FIFO, LIFO, item by item, which is specific cost, and then the average cost. And when you scroll down to average cost is the simplest method. So if they say, according to the Florida Contractors Method, what is the simplest method? Then you go to the FCM, it's page 3-59, in chapter 3 under accounting for inventory. And that would be your answer. So you need to always read the question. What is or is not a major inventory category? Moving on, page 121 here. Raw materials, supplies, work in progress, finished good. Those are your 4 categories. Another question I've never seen any math or any questions on these ratios, but it has asked me if your average, if you have a low inventory to materials ratio, what does that mean your average inventory is? And if it's a low ratio, it's high. A high ratio can mean that you're maintaining too small of an inventory. I've seen that question pop up. Obviously, that's why it's highlighted. Good inventory control does or does not do which of the following? A good A, B, C, D question. And it continues on this next page here. I was advised reading the material and doing the 15 Q&A questions at the back. 11, payroll accounting. What is the largest and most variable cost in building? If you were to think about it logically, that's going to be your labor. And when you own a company, whether you have 1 employee or 100 employees, what do you need? You need this list. You need detailed earnings. You need summaries of payroll and accounting information, good payroll records, and labor cost data. It's an easy question right there. I had this one on my actual exam. It was actually pretty tricky. It says, what were the 4 ways to keep payroll records? And I know I got this one right because A said 1, 2, 3, and 4. And then B, C, and D listed like keeping track of. 2 of them said time cards, and there's no time cards on this information. That's a separate paragraph. And one said direct deposits, and there was no direct deposit information in here, so I was confident. But the questions do try to trick you. I was stuck on this one for a while. Highlight this page. Let's keep going here. Page 132. What are the 2 ways in which taxes are withheld? In which way you accumulate tax liabilities? Sorry, what are the 2 ways you accumulate tax liabilities? Taxes withheld from payroll checks and from your employer taxes. Okay, there's a trick question in here because you have forms in page chapter 1, and it lists out. Let's go there in a second. But you know what a W-4 is and a W-2 is. Anytime you get hired, you fill out a W-4. You have to put your name, your address on there, your marital status, if you have any exemptions, your address. And that's how your tax calculations are made. And then your W-2 is what you receive if you're not a 1099. What you receive at the end of the year, that's going to list all of the income you've had, how much you've paid in taxes to who you paid it for. And so that's your W-2. So we all know what that is in your 1099. Now you have your Form 941 and your 940. And it does simplify these forms on page 138. Here were the 2 test questions that I had. Give me a moment while I pull this up in the book because I'm going to show you guys something. It asked, my first question was, what form helps you calculate the state unemployment tax? I was like, state? Huh. Now I have it highlighted here so you can see it. But the options were 940, 941, and 2 other tax forms. And I was looking at it and I said, the 940 is used to report on pay an annual basis the federal unemployment compensation tax. 940 has nothing to do with state here in the FCM. And so I got stuck on this question for a while, and I had to read this, and eventually I found that the 940, this form summarizes the yearly taxable wages and computes the maximum for state unemployment taxes. It was 940. So if you have to reference both books, do so. Forms can trick you. If it's a maximum state unemployment, it's the 940, even though this report is used to pay federal unemployment taxes. That's a trick question. The other question that I had that I got wrong on a practice exam was, what is the form that's used to deposit federal unemployment taxes with local banks? I was in the BGA and the FCM, and I was like, okay, well, federal unemployment taxes, That's the 940 federal unemployment taxes. But the key word was deposit. It's your deposit form, and that's the 508. So again, make sure you read the test questions carefully, and if you have an answer, and read the answers, you can always work backwards. So if you had form 508 and you're like, well, I don't know for sure, look up each form and read the definition of each form. Take your time. You have 6.5 hours. That is plenty of time. Plenty of time. Chapter 12, overhead expenses. Overhead expenses tend to remain fairly constant in spite of changes in your sales volume. Obviously, if you're selling a lot more out of the same building, does your rent and your mortgage go up a lot? It stays the same. Now that's fixed overhead. If you're gonna bookmark your or tab your book, I didn't tab mine. You need to tab this page because this is where a question of what is a variable or what is a fixed overhead expense or what is not. Come here to check this list. Now on 2 pages, 147, you have variable expenses listed out and fixed expenses listed out. They're also listed here and they're also listed on this page, variable and fixed. These are give me questions. Make sure to come to this page. One thing to note is payroll taxes and some other taxes. They can be both variable and fixed overhead. Because if you're paying a person W-2 salary, then you know how much money you have to pay them in taxes. But if you're paying, let's see, a sales rep in W-2, you don't know how much they're going to make in a year. So your taxes are variable depending upon how much they sell and how much you have to pay them for that work. So payroll and some other taxes can be both. I didn't have that question. It was more like what is and what is not. It was very, very cut and dry. If you're going to do a budget, which you should do a budget, you need to do a monthly analysis. Again, just point out everything that always says monthly. Do everything monthly. General ledger accounts, I would highlight this. You should know this. This is very basic. This is your gross sales minus direct costs equal your gross profit. Subtract out your variable costs, you get your selling profits. Subtract out your overhead, you get your net profit. This is too basic. There's an income statement at the end of the book that will actually break it all down. But that is, in summary, the basis of what you need to know for the exam. Here's the list. Page 149. The best way to control fixed overhead is to make monthly comparisons. Again, just pointing out everything that it asks how often or how frequent should you do X, Y, or Z, it's monthly. Okay, we'll get to this in another chapter, but the process of spreading a cost over a period of time is called amortization. Let's keep moving. Chapter 13, equipment records. What is the single largest investment that most builders make? It's equipment. Again, everything that I highlight is a test question. I'm only highlighting the test questions. I recommend reading the book, taking the practice questions at the end of each chapter. The answers are in the back. I'm giving you guys the highlights on what are the test questions. What is the act of setting up an asset in the general ledger called? It's called capitalizing. Taking an expense for a purchase over the life of an asset, that's depreciation. And we'll get into that. It's recognizing the value of that asset because you pay for that all up front. So you have your accumulated depreciation on the back end, which offsets that. We'll get to that later. Let's keep it moving. How long have we been on this video? 19 minutes. We've gone through a few chapters. We're moving. All right. Classifying fixed assets. These are all the fixed assets according to the BGA. Note that improvements is one of them. The test question that always pops up is what long-term asset is not depreciated or depreciable? Land. Land is not depreciable. That's a star of that. If you, well, don't write in your book. Underline it and highlight it. So accumulated depreciation is a negative asset. We've seen that. That's on page 15. Remember I said there was 2 to note that you need to know. You have the bad debt reserve that we covered that. There was like 10 or 11 questions out of chapter 5 that we went through. Depreciation reserve is the other. That's your accumulated depreciation. That is a negative asset. All right, we've got that highlighted. Equipment record. I actually have this on my exam. Is what is not something that's listed on your equipment record? Well, you have a bulleted list here, and you also have an example of what it is. That was on my test. Something like that, right? Equipment cost summary. I don't have that highlighted. You might want to highlight it. I didn't. Don't need to. So back to depreciation, and that is designed to let a business recover, which you charge against your income. That's why it's a negative asset. The cost of buildings and equipment over the useful life of that property. We're going to get into a lot of really good information here in a second. Okay, here we go already. The maker system. Makers dictates the depreciation periods that you're allowed to use for each specific class of asset. What's a class of asset? Well, you have office equipment, you have real estate, you have your automobiles, different classes of assets. And this tells you the depreciation periods, which are AKA recovery periods. They specify the time of which you can claim depreciation for that class of asset. So you can depreciate, obviously, a vehicle a lot faster than you can depreciate your commercial property. Right, so let's make it make sense. We'll go on that the next page. Math, very important here. We're going to cover that in the next video, which is section 2 BGA math. But there are 2 ways to depreciate assets. You have your straight line and your declining balance. Here's what we cover in the math. So obviously, if you have an asset worth $8,000 and they tell you you have the depreciation period is 10 years. Well, if it's worth 8 and you depreciate it over 10 years, then you're going to depreciate it how much a year? 800. That's super basic math. Now let's say you had a salvage value on that for $1,000 and you wanted to use the straight line. If you have a salvage value, then you take the $8,000 minus the $1,000 salvage value, and now your new depreciation base is $7,000. And if you're still depreciating it over 10 years, 7,000 divided by 10 would be 700, not 800. Now, where they trick you up on the test is they'll give you a declining balance depreciation and a salvage value. And they'll say calculate the first year of declining balance depreciation. Salvage value is 5,000. Salvage value does not matter in declining balance. This is why the math is very important. I will tell you the ways in which they could trick you and what to pay attention for. That's going to be in my next video. Declining balance, we'll do some math here. And declining balance does not have to be 200%. You could have 125%, 150%, or 200% for the declining balance depreciation. They can ask you, based on this depreciating value, what is the first year's depreciation method if they depreciated X amount? Well, if they tell you the depreciation is $10,000 and it depreciated, let's say $1,500, then what is that? It's not straight line because that would be 1,000, right? 10 years into 10,000 would be 1,000. And then they have double declining, which is 200%. That would be 2,000. But they can ask you, if you look at it, it's 1,500. That's 150% declining balance. We'll go through the math in the next one. Know that declining balance is usually used for your heavy equipment and your vehicles, because think about it, make it make sense. When you drive your car off the lot, it depreciates a lot, so you decline it faster. So you'd use the 200%. We'll go through the math later. 2 test questions on this page. At least 2. Know that your residential property, under the maker's rules, you have a 27.5 year depreciation period. And for non-residential, so commercial, is 31.5. I think they made a typo here. This confused me. I don't know if anybody can explain this to me, but it doesn't make sense. Office building is what? Non-residential. And it says depreciate on straight line with remaining of 32 years. I think that's meant to say 31.5. Correct me if I'm wrong. Every test I've taken, all commercial is 31.5. Machinery and equipment, just like your autos, your trucks and stuff, they depreciate quickly. So you use the 200. Office furniture is straight line with 7 years. I've never seen a question there. This is where the left jab hook comes in. What declining balance percentage does the 15 and 20 year asset class employ? Well, you have 125%, 150, 200%. So at least you can narrow it down to that if you don't know. But I highlighted it right here. The 15 and 20 year classes, they employ 150. Anything property, whether it's residential or non-residential, must be straight line depreciation only. They even repeated it in 3 paragraphs later. Straight line is required for residential and non-residential real estate. Remember, if I highlight it. These are questions. This is not fluff. Another question would be, what are the partial year depreciation periods? You have half year, mid-quarter, and mid-month. That's all you need to know. They're not going to have you calculate anything. Don't worry about that. Just highlight these 3. I think in my questions I had half year, mid-quarter, half quarter, and mid-month. And I was like, which one is it? And I came here, I found the answers. I didn't have them highlighted. Just highlight these. Again, now we're back to amortization. This is spreading the cost of a major expense over time. It's for accounting purposes, so you can have a more realistic financial perspective of what's going on in your business month to month. Like if you spend $3,600 on a website, that's an upfront cost, but if you amortize it over the course of the year, then it's technically like you're just recognizing that expense in your finances for $300 a month for 12 months. I think that's how it's used. Like, I got my finance degree over 10 years ago. I'm more up to date with the building codes. But anyways, lease or buy. Wow, I actually had 3 questions on my actual exam when it comes to lease or buy. There's a bulleted list here, a bulleted list here, and paragraphs that continue on the next page. If you have test questions on leasing, you can go to the index and just go to L. And it says leasing equipment, page 169. So you can tab it or not tab it. This actually, like I said, 3 times on my exam. Know that when you lease, what it can do for you. Mine was an immediate tax deduction. And then there was some other questions. But if you come here, you'll find the questions. That's the answer. Come here and you'll find the answer. Sales and trade-in, this is math. This is when you have a vehicle and you're buying a new vehicle, whether you're trading that vehicle in with somebody or the dealership, and what that vehicle's book value is. What is your new book value on the new vehicle after trade-in? I've seen that a lot. I didn't like how they showed it to me here. I didn't really fully understand that. I'll give it to you in more the sense of how it would read and look on a test. That's going to be, again, the next video. 14, cash budgeting. Let's pick up the pace here. Oh, gosh. Well, this is the one question I had. So I only missed 4 out of 120, but I had one question that I really had absolutely no idea on. Let's highlight this first. So when lenders examine your financial statements, they look closely at your recent cash flow. Right? Because if you have good cash flow, you have a higher ability to pay back a loan. Versus if you're bleeding cash and you have bad cash flow, why would somebody lend you money? if they looked at your cash flow and you're like, these guys are bleeding money. So they wouldn't. So improved cash flow should help you get a loan because lenders look at your financial statements. The next thing would be your liquidity ratio. So this is something to highlight. The ratios that you can use to judge your cash position. Cash is like liquid. Anything liquid is that you can convert to cash within 12 months. And that's on either the assets or the liability side. They're called liquidity tests. You use ratios in relation to one another, and you use ratios to help identify trends. The first test is called the current ratio, and the current ratio is your current assets divided by your current liabilities is going to give you a ratio. What are your assets to liabilities within that's liquid within 12 months? And that's going to give you a number that's blank to 1. Remember, on the bad debt and delinquent ratio that we covered in section 1, that was blank to X. That was 1 out of how many dollars is bad debt, 1 out of how many dollars in your accounts receivable is delinquent. Here you have the opposite where it's blank to 1. So it's how many current assets do I have for every $1 of liabilities. So where the test question is what should you do if you're what should you improve, or what should you do if you're looking to get a loan, a financial loan? And one of the answers was increase your cash flow. And I was like, well, you should, like, if lenders examine your cash flow statement closely, more cash flow, well, that one makes sense. And then the other one was decrease your liabilities, your current liabilities. And when you decrease your current liabilities, you'll have a better current ratio, which means you're more liquid and you're better at your cash position, and you have more money and assets to meet your financial obligations. I didn't know that one. Point is, when you take this test, there are going to be a couple questions that trick you. I really know this material and I still missed 4. You'll miss a few, but everything that I'm telling you to highlight will at least get you a 90 plus. We'll cover this in the math as you see here, because the quick assets ratio is also known as the acid test ratio, so it's like, okay, well, those are test questions there. It's super easy because the acid test is the exact same as the current ratio. It's just inventory is included. And inventory is a short-term asset because it assumes that you can convert your inventory to cash within 12 months. If you need to sell something, you can sell it. We'll cover the math here because that's super important. They will try to trick you in the questions. I had 2 questions on my test with this. That's preparing a cash budget. You have 2 methods. You have the cash movement method. Well, you can highlight this. You have the cash movement method and the source of funds method. One of my questions, this was one of those other left jabs, was what is the method that's especially valuable for builders who have wide variations in their business volume from month to month? I had to really look this one up. It's the cash movement method. Now, the source of and applications of funds method, this method is more precise than the cash movement method. Not a whole lot to note here, but know this page exists. I've had two very basic questions right off of this page. Break even, very important. The math here, it made no sense to me. I'm going to break it down. Break even analysis is very likely to be on your exam. I've had a lot of questions on this, and basically break even, it equals your fixed cost, right? The dollar amount, and you divide that by, again, don't write in your book, I've already taken the exam, minus your fixed percentage. So when you're looking at break even, the way that I've always solved these, and we'll do the math on these, is you have 3 buckets of expenses. You have your direct cost, your variable cost, and your fixed cost. So a lot of times the question will give you all of these, and you just figure out some very simple math to figure out this percent or these 2 numbers, and then you can figure out your break even. We'll do a couple. For the test, what you need to know is, what is your break even? It is when your profits fall to 0. That's another example. It just tells you when the minimum amount of sales you need to break even. It's like your own bank statement, your own life. It's like, how much do I need to earn just to cover my living costs? That's your break even. All right, test question. Still make sure this is lined up. Okay, we're good. We're almost done. What is an area of the business that produces profits? Cost centers. What is an area of the business that does not produce profits? It's not a cost center. Objectives of the cost system. This is a bulleted list. I've actually never seen this on my exam. I've really never seen this, but if you're going to identify one out of these 7 that you need to know, is overruns. The reason it's important is if you're running a construction job or any job in general, and you're like 50% done, and you've spent 20 grand on the job, but you've only estimated that job to have spent 15 grand by the time you're halfway done, then you've already overrun on materials and labors or whatever the cost is by 5 grand. So you're at that point 33% overrun. Like, that's a major event. Whenever you have an overrun, this is telling you stop the job immediately, like figure out what's going on and fix it. Otherwise, you're going to lose money on that job. Figure out where you're over and why it's. So I haven't seen that on my test, but I know it's important. Math, labor performance standards. One of the questions is, how do you measure direct labor? A, days. B, weeks. C, months. D, hours. Labor is measured in hours. We're going to do some math here. I've seen this come up on almost every exam I've taken, whether practice or the one real one I took. Highlight this. It compares actual time to standard or estimate. The standard of each phase for each project is the amount of time in which a particular task should normally be completed. Always make it make sense. So like if I have a roofing crew, or all my roofing crews take a standard of 12 hours to tear off a 30 square roof and back, they'd get it done a lot faster than that. But I'm just saying for this example, and then all of a sudden I bring in a new crew and they actually took 14 hours. Well, my standard, the way I priced the job at and what my crews do are 12. Now I brought this new crew in at 14. So they take 1.2 times as long. You know, it's a ratio. And so I'll show you guys how to calculate it. It's actual divided by standard equals the ratio, or you flip that ratio times the standard equals the actual. That'll be in the next video. Math, very important. All right, let's finish this up here. We're close. 16, you analyze labor hours by the job. What is the best place to do a weekly labor cost analysis? Well, if it's labor, it's going to be in your payroll. It's not going to be in your check register. It's not going to be in any other register. It's going to be in your payroll register because it's labor. One of those common sense questions. The only reasonable way to assign overhead is in proportion to direct labor hours. That's almost exact same statement's going to come up in a few chapters. That could be a test. Again, I only highlight test questions. Especially if it comes up more than once, you need to know it. Last page. What statement can you put together by using the job cost ledger system? You can put together a complete income statement at any time using the job cost ledger system, because on a job cost ledger, what is it? You're going to have what you sold the job for, what your direct costs are, what your gross profit is minus your selling expenses. So you have your selling profit, you net out your overhead, and now you have your net profit. So you can take each job and that's going to complete an income statement, and it's going to be actually like, if you want to see what an income, these are your cheat sheets, by the way. If they ask what is on a balance sheet, what is on an income statement or not, you go to page 331. This is your balance sheet that shows everything on your balance sheet. And then on the next page, you have your income statement. And if they ask, what is something that's on both the income statement and the balance sheet? I think that's net income. Yeah, net income. So on your income statement, you have net income. But also on your balance sheet, which shows your assets and your liabilities, you have your net income for the current year. So that's also a pro tip question. Bonus. Petty cash funds. All you need to know in chapter 17 is what the IMPRIS system is. It's only a couple pages. This is the book it's in. It's like super easy. I don't even think I had a question on this on my major exam, but I've seen it pop up a lot. It's like very easy, just a couple of pages. I wouldn't even waste your time doing the 15 Q&A at the back. I would just read it. It's like 3 pages long to read. Know what it is and what it's for. I think last chapter, balancing the bank account. When do you do it? Monthly. Just one of those monthly. 10 steps to accurately reconcile your bank account or your bank statement. This is kind of a math question. It is simple addition and subtraction. This is basically just taking account for any adjustments, outstanding checks that you've mailed that haven't cashed yet, and deposits you have coming in that are in transit. I did not have one of this on my final exam, but I've had it on a lot of practice exams, and they were confusing to me at first until I figured it out. I'll share my method of how to answer these questions in the next video. Like I said, there's a lot of math in this section. It has to be another video. That'll be the next one. Outstanding checks. I mean, just balancing adjustments are for timing differences. Write off very small amounts. Look, if you're balancing your bank account and you're off by a couple cents or a couple bucks and you're like, wow, that's nothing. I've just double checked everything. I can't figure out where it's from. Don't worry about it. Write it off. It's literally nothing. Just keep your perspective. A couple bucks, is it really worth it? Spending your time on trying to figure out why you're off a couple bucks? It's not. I think this is the last chapter. Accounting for estimates. When you put an estimate together, what's that? What do you have to take into account? Well, how much, what materials and how much? What labor are you going to need and how much? If you don't have the in-house labor, do you need to have a sub? And for what? Do you need any equipment that you're going to use or rent? And we covered equipment previously. What are your selling expenses in correlation to this job? What are your fixed overhead allocated? What's your profit going to be? That's how you do an estimate. You know, I've done thousands of roof estimates. Probably a lot of y'all have done estimates before, and you need to take into account all of these things. And this is just very basic. In the Florida Contractors Manual, what is the first thing that goes in front of every estimate? It's a job completion schedule. That's all I have highlighted. That's all you need to know. We're almost done here. Just important to note, you control equipment costs with good scheduling. No one likes idle time. No one likes idle time. Anything you can do to minimize idle time. Here's that question that I said would pop up a few chapters later. The best way to allocate overhead is on the basis of total labor hours. I didn't have any math on any of my practice exams or the actual exam, but I would highlight at least just this equation. If you get asked, just come to this. Your annualized labor equals your total labor divided by your months to complete times 12. And this, I think, this paragraph right here explains how to do that. So I would read that. And we are done. Done with section 2. Math out of this section will come next. Then we'll eventually get section 3 up and the math to go along with that, depending on how much it is. I might throw that in as we go. And then if you'd like to see the Florida Contractors Manual and AIA docs, please let me know. Just you can connect with me on Instagram or TikTok. I've got the same handle. Or you can find me. You just leave a comment in this video. Really appreciate you guys sticking around for this. This is exactly what you need to know to pass the exam. If you'd like a full highlighting guide, again, I've linked one in the description, but this guys is what you need to know. You don't need to go highlighting the entire book. I mean, there's the information that you need is what I'm telling you guys you need. And I took all the exams and simulators and aced it. So if you'd like to show some support back for the time I took out of my day here to help you guys out, would appreciate that. Just subscribe, and we'll catch you guys and gals in section 3 next.